Welcome to another World Miner session. My name is Ola Johanneslin, the CEO of World Miner. You are invited to access any of our platform, install the application, become part of our community. Visit our social medias, X, Instagram, Facebook, YouTube, Medium, or join one of our Telegram groups, World Miner Global, World Miner Brazil, and World Miner Bulgaria. Download our application on the App Store or Google Play and join the community. Today's subject is best scenarios for mining, read the landscape and thrive. But first, as World Miner, we believe that blockchain mining should not longer be the privilege of the few, and everyone should have access to its benefits. In the future digital economy, regardless of location or wealth, everyone should have the equal opportunity to participate and gain. We think that only together we can move towards a more inclusive, sustainable, and transparent future. That is the reason why World Miner strategically works with WorldCoin to shape the future of cryptocurrency together. To address the regulatory gaps in WorldCoin's global market within OpenAI's grand vision, to enhance its reach and influence, as OpenAI envision a future where advanced AI systems can significantly improve the world, solving some of the most pressing global challenges, believing that artificial intelligence has the potential to positively impact many aspects of life, from healthcare to education to climate change to economic development. Their vision is to see AI deployed in ways that enhance human potential while ensuring it's aligned with human values and the safety principles. WorldCoin's vision revolves around providing every individual with World ID, proof of personhood system that verifies users as unique individuals, distinguish themselves away from bots. This is done using an orb, a biometric device that scans people's irises to confirm the identity while maintaining all the privacy. WorldCoin is used within the WorldCoin's ecosystem for transactions, governance, and incentive participation. WorldCoin aims to address this economic inequality by distributing WorldCoins to individuals globally, to enable access to digital economies and decentralized finance systems. It's part of the larger vision to promote universal access to financial services and identity verification in a decentralized manner. As World Miner, we trust in the market potential of our coin, ATM, which was developed to provide computing power and to help fill the gaps left by WorldCoin, to offering a substantial market opportunity. The users can acquire computing power at a low cost, earn returns from both WorldCoin and World Miner. World Miner and WorldCoin, both aimed at OpenAI's core initiatives, both developed a robust cryptocurrency financial ecosystem. Their market education, promotion, and technical support demonstrates that strong capability. World Miner provides not only basic staking mining returns, but also offer additional rewards through various incentive programs and activities. So by participating in staking reward programs and computing power competitions on the platform, users can earn extra returns, further boosting gains. Join World Miner today to shape your financial digital future. So let's talk about implementations of the context and get ready to mine, to trade. Let's start by usual ways in traditional economic sectors and how they usually do it. Some utilize method to access the market. Contemporary methods for evaluating markets and deciding investments are constantly changing and evolving, driven by the advancements in technology and the increasing complexity of the business landscape. And here's the breakdown of some of the key approaches. Market research. The traditional methods, surveys, focus groups, interviews, remain valuable tools for gathering that qualitative and quantitative data about consumer preferences, needs, and behaviors. But the most recent approaches is listening in on social media to analyze that social media conversation and trends gives another insights into consumer sentiments, how they perceive a brand, or the emerging market trends. The big data analytics is to leverage that large data sets from various sources. Could include online transaction, traffic from the websites, social media, to identify patterns and predict the market behavior. Artificial intelligence, AI-powered tools automates all this data analytics, identify market opportunities, and even predict consumer behavior with much greater accuracy. When it comes to investment decision making, the traditional techniques like net present value that calculates the present value of future cash flow, considering the time value of money, or internal rate of return that determines the discount rate which the net present value of an investment equals zero. Payback period. It measures the time it takes for an investment to generate enough cash flow to recover its initial cost. So in modern techniques, scenario planning, to develop multiple possible future scenarios to access the potential impact of different events on investment outcomes. Evaluate the flexibility and strategic value of an investment, considering the availability to adjust or abandon is based on future circumstances. The Monte Carlo simulation, they utilize random sampling to model the probability distribution of potential investment outcomes and more comprehensive risk assessment. Key considerations always to look into: data quality, ethical considerations, adaptability. So the accuracy of the reliability of that data is crucial for effective market evaluation and investment decisions. To utilize data ethically or responsible is essential, particularly when you're dealing with sensitive consumer information. To adapt, the business environment is constantly changing, so it's important to be adaptable to adjust investment strategy accordingly. So by combining traditional and modern methods, businesses gains a more comprehensive understanding of the market dynamics, makes more informed investment decisions to drive the growth and the success. So cryptocurrency projects has vested schedule for allocated tokens. That means that those tokens gives to investor or founders would not be available right away, but over time or just a later date. So if you are vesting schedule like that, you want to consider selling your tokens sooner rather than later. The second thing to watch out for is when it comes to tokenomics is the inflation and total supply. Inflation is not necessarily an issue as long as low, as long as you aren't planning on waiting to sell you when you retire. It's also important to mention that the inflation is used by many projects to incentivize network participation. That means you can sometimes avoid this inflation by staking or delegating your tokens if you plan on holding on to your tokens for some time. Sometimes, obviously, because of aggressive token inflation, can be used to pay liquidity, providing many DeFi protocols would probably cause several issues in the first place. With these tokens, it's best you follow the wise word of finance creator. Do not buy it, earn it. A DeFi token might just be the best example how important the supply metrics of a token is. In regard to its price, DeFi is one of the few cryptocurrencies that have the higher price tag than main cryptocurrencies. And the simple explanation for this is that the demand for the token is exceptionally greater than its maximum supply. Who wouldn't want to own a token that give them say in how one of the best DeFi protocol is run? This small supply is also why DeFi market cap is very low. The behavior of cryptocurrency and digital mining markets are complex but fascinating topic. These dynamics and interaction between Bitcoin price and its mining cost are tightly linked. Some research has identified two types of behavior in the most famous cryptocurrency system: heuristics and random traders. Overall, the behavior of the cryptocurrency and digital mining markets is influenced by a variety of factors, including the technology, the regulations, and the sentiments in the market. As we know about mining, it's the process of creating new digital coins and putting them into circulation. This happens at a very slow rate. Electricity consumption from cryptocurrency mining has been increasing over time. The aggregated mining power of blockchain affects the market quality of cryptocurrency trading platform. So these characteristics, both from the markets, has led to label DeFi the main cryptocurrency of an important group of wide. That would influence all the rest, which is quite arguable. A positive market for digital mining and crypto trading is characterized by several key indicators. Increased trading volume is a strong sign of a healthy market, as more people are buying and selling cryptocurrency. Rising prices is another indicator, as investors are willing to pay more for digital assets. Growing adaptation of cryptocurrencies by businesses and individuals is as well a positive sign, as it shows that the market is becoming more mainstream. Positive news and media coverage can absolute and contribute to a positive market sentiment. Increased investment from institutional investors, such as hedge funds or VCs, venture capitalists, is another sign of healthy market. So improved infrastructure of crypto trading, such as the exchanges and wallet, also make the market more attractive for the investors. Government regulations that are favorable for the crypto industry can create a positive environment for digital mining and crypto trading. However, it's important to note that cryptocurrency market is highly volatile and can be subject to sudden price swings. Therefore, it's important to do your own research, invest only when you can afford to lose. Cannot underline that more than ever. Invest only what you can afford to lose. While technical indicators can be useful, the utility declines in the absence of other critical factors, such as the one we outlined in the previous chapters. What more is that technical analysis can suggest different trends depending on the time frames you're using and the way you decide to draw your trend lines. That said, there are two technical indicators you need to pay attention to when it comes to deciding when to pull out. The first is main cryptocurrencies. That includes Bitcoin and Ethereum. The behavior, for instance, a cryptocurrency dominance is how much its total market cap is accounted by BTCs. Currently, at a percentage, seems to have been declining steadily, and so forth. So it's very important to find the values, see the trends, and put that indicators in place if you are short selling or long-term buying. And when it comes to a new launch of a coin, for example, it's important to see the action that you take with that crypto coin. Had it in a fair launch, or at least an equitable pre-mine with vesting schedule that doesn't make you run for the hill. Make sure the inflation is not too high. See if there are ways to mitigate against it until you decide to sell. And be sure to know the circulating supply. Compared to maximum supply, assuming there is a maximum supply. Otherwise, you might find your token suddenly losing value as additional coins start to flood the market to drown out demand. There is one last thing you need to take into account when finishing planning your ultimate crypto coin exit strategy is what the technical are saying to you. An exit strategy relies on their technical indicators. Other cryptocurrencies and tokens that are gaining force daily includes WorldCoin, ATM, And nowadays, with this partnership with WorldMiner, has changed the entire reality of digital mining and staking in a new way, in format with a less threshold. So once you know more about how to analyze the market, learn more about the ECRN system by WorldMiner, that is a fast and simple form to invest to obtain bigger profits in a short period of time. WorldMiner's innovative staking mining platform combines both, and it allows various staking options depending on your appetite or budget. So what is staking? Staking is the process of locking cryptocurrency assets for a predetermined amount of time in order to support a blockchain operation. Staking your cryptocurrency earns you that additional cryptocurrencies. Many blockchains use proof of stakes, where users stake predetermined amounts of cryptocurrency to support the blockchain by confirming new transactions and generating new blocks. In WorldMiner, you enjoy that 4 different staking mining methods. Dual coin mining. The first and most important part in our platform is the dual coin mining, the WorldMiner flagship product. In this method, you stake only 100 USDT in the value 70% USDT, 30% of SAM-C token. Respectively, the principal will generate every 24 hours WorldCoin and WorldMiner coins in the same 70-30% ratio. That daily output will be automatically transferred into your wallet. And the dual coin mining has 4 different modalities: a duration of 7 days, 30 days, 90 days, 180 days. The difference is the longer you stake, the better profitability. So in example, 7 days give you 0.7% daily output of the 70-30% ratio of WorldCoin and WorldMiner coin. In the 30 days, it's 1%. In 90 days, it's 1.2%. In 180 days, it's 1.5%. It's important to remind and remember that when your staking period is over, you can select to get all your principal back or to start a new staking with the same principal. This methodology applies to any staking in our platform. The ATM staking is the second staking mining method in our platform. Here you utilize the WorldMiner generated from the dual coin mining, and you stake it to generate ATM coins at 1% daily output profit, and it's a lockup period of minimum 10 days. The ATM is one of WorldMiner coins, and it can be traded on the secondary market. Liquidity mining is the third method in our platform. It is very different because here you can stake either WorldCoin or our ATM coin, or both if you prefer. You get 1.5% daily profit of the same coin for a lockup period of 10 days. But if you decide to restake again after 10 days, the platform will grant you an additional 0.5% extra for the following 10 days. And this restaking process you can do until you reach maximum of 5% daily reward. Bear in mind that your accumulated output percentage in this method is bound to each independent staking process you started. Our last staking method, user can stake either WorldCoin or WorldMiner or both for a 24-hour lockup period only, and gain 0.7% daily profit in the same either WorldCoin or WorldMiner coin. And this is an interesting gain because from the traditional or virtual markets, you just install the WorldMiner app and you begin your journey with WorldMiner. This concludes our topic for today. And I would like to thank everybody for joining, and we see you all in the next session. Thank you.